This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 30th, 2014. Euro dollar. So the market remains locked within an intense downtrend, recently breaking to another 2014 and plus 2-year low on Tuesday, down to 121.25 thus far. We have seen a bit of a bounce into the European Open, but the market is expected to remain very well capped into rallies, with only a break back above the 50-day moving average, which currently comes in around 123.90 to compromise the bearish outlook. Cable. Sterling dollar is in the process of consolidating just off recent 2014 lows, with a break below 154.85 to open the door for the next measured move downside extension towards 152.50. Ultimately, only back above 158.25 would compromise the bearish outlook. Dollar yen. Dollar yen remains locked within an intense bullish uptrend, with the market recently putting in a higher low at 115.55 ahead of the next upside extension towards and back above the recent 7-year high at 121.85. We have, however, been seeing a little bit of a pullback in Tuesday trade, but any setbacks are expected to be very well supported ahead of 117. Euro Swiss. Euro Swiss is attempting to carve a longer-term base, but the market will need to establish back above previous support at 20.45 to confirm the basing outlook and open the door for fresh upside. Inability to establish back above 20.45 will keep the pressure on the downside and the focus on a potential test of that major barrier at 120. Aussie dollar. Aussie dollar is attempting to correct a bit on a short-term basis, with the market flirting with a 20-day moving average. However, ultimately, the downtrend remains firmly intact and a lower top is sought out ahead of the next downside extension towards the major barrier at 80 further down. Only back above some previous support at 85.40 would compromise the bearish outlook. Dollar CAD. Dollar CAD is in the process of consolidating recent 5-year gains, with the market focused on a test and the next upside extension towards a measured move objective at 117.50. Ultimately, any setback should now be well supported into previous resistance at 14.65, while only below 113 would compromise the bullish outlook. Kiwi dollar. Kiwi dollar remains locked within a bearish consolidation, with the market seen lower eventually below the 76.10 yearly low and towards 72 further down. Ultimately, any rally should be very well capped into the 79 area, with only a break back above the consolidation high at 80.35 to compromise the bearish outlook. S&P 500. The SPX 500 has recently rallied up to a fresh 2014 and record high, just shy of 2100 at 2096, ahead of the latest minor pullback. But a break back below 2064 would be required to take the immediate pressure off the top side, and until then, the focus is on a break of 2100. Gold. Gold is locked within the middle of a key range between 1256 above and 1131 below. A break above 1256 would suggest that a medium-term base is in place, with the market potentially shifting to the top side. However, inability to take out 1256 keeps the medium-term downtrend intact, with a focus on a retest of the recent 4-year low at 1131 and potentially a break exposing 1000 further down. That's all for today.